Hello, everybody. In this time, we are explaining about what is a budget. A budget is a financial plan that outlines the expected income and expenses for a defined period. In business context, budget can be a roadmap guiding resource allocation to achieve organizational goals and objectives efficiently. It also includes assumptions of future fund needs, setting spending limits, and minimizing debt. A well structured budget provides a clear picture of income and expense sources, which helps keep track of expenses to maintain financial stability. In addition, it assists in identifying cost cutting areas and saving for potential investments in the future. Review the budget regularly to ensure its relevance to the changing market conditions. So, the budget helps businesses and individuals make well informed financial decisions and control their overall financial health. And then, what's the purpose of a budget? Budgeting isn't about depriving yourself, it is about taking control of your money. This can make it easier to achieve short, mid, or long term goals. Making a budget shouldn't feel like a punishment. It is a plan for all of your money that includes money for fun stuff too. A budget doesn't have to be rigid. In fact, it should change as your circumstances change. When you get a rise, for example, or become a homeowner, budgets can be reviewed and updated periodically, and some people choose to do this monthly, bi monthly, or twice a year, depending on the life changes that occur. And then, why is budgeting important? Budgeting is not only useful for individuals who struggle financially. A budget is a stepping stone to your financial goals. It allows you to live within your means and derive maximum benefits from available resources. Budgeting can help us for the first about financial awareness. Budgeting helps to understand your relationship with money. With a budget, you know about your income, spending scope, and saving opportunities. Regular tracking helps to spot patterns and make changes if required. Ultimately, budgeting helps avoid frivolous expenses and inculcates financial discipline. And then the second, reorganize expenses. Budgeting helps to forecast those months with tight finance and ones with extra liquidity. To ensure manageable and smooth finances, you may adopt methods to even out the highs and lows in a budget. The third, emergencies. An ideal budget earmarks funds for an emergency and plans for goals like retirement or vacation. Flexible budgets allow you to organize allocation based on your immediate needs. The fourth, relieves stress. Formulating a budget and adhering to it ensure financial independence. While budgeting is not a cure-all, it helps you manage financial decisions and prepare for challenges. And fifth, reduce debt exposure. A budget helps you to map out expenses and reduces overspending. In effect, it limits or eliminates exposure to debt or credit facilities. And then we move to the types of budgeting. There are different types of budgets prepared by individuals, businesses, and governments. We start from the first, personal budget. An individual or family plans their monthly earnings and expenses to ensure that they don't run out of cash before the next paycheck. The second, labor budget. It is tailor-made made for labor-intensive firms, businesses that are heavily reliant, and employees need a systematic plan balancing revenue and wages. The third, corporate budget. It is a plan to maintain cash flow, operating cash, and emergency funds efficiently. It comprises values, sales, material, production, and factory overheads. The fourth, cash budget. It is simply a cash flow prepared in advance and it documents anticipated payables and receivables for an upcoming period. It is prepared to ensure that the business has enough money to run the organization effortlessly. The fifth, government budget. A financial plan prepared by the government accounts for the estimated national revenue for a particular financial or fiscal year. The revenue comes from taxes, fees, and grants. It also considers the anticipated exposure and expenses of public services and infrastructure. And then the sixth, financial budget. It incorporates assets, liabilities, and shareholders' equity. It charts a company's short-term and long-term financial goals. And then the seven, master budget. It is a culmination of various lower-level budgets prepared for different areas of business operation. It is a consolidated business plan. And then the eighth, flexible budget. It is a realistic approach adopted by businesses. A flexible plan considers changes in expenses and costs over the period of adjust accordingly. And the ninth, operating budget. It is created at the beginning of a given period. It reflects the profit and loss accounting, accounts for fixed, non-operating, variable, and capital expenditures. I think it is enough for this session. Thanks for watching, and don't forget give this channel with your like, comment, subscribe, and share. Thank you.